Are you getting into the investing game, don't know where to start? Well, you're in luck because in this video, we're going to talk about investing ideas for beginners. This is not financial advice, it's not investment advice. I'm not a financial advisor. Before you do anything with your money, just talk to a financial advisor and an investment advisor. With that out the way, let's go ahead and get started. The purpose of this video is to put you guys into the right mindset of how to structure a portfolio. This is going to be a multi-part series, so this is just part one. So first of all, we're going to be talking about how much of your portfolio is investable. That is, how much can you allocate towards investable assets. So with that said, I'm going to run you through a simple example here. This is sort of how I structure my portfolio. Let's say you have about $50,000 in your savings account. You've saved out across your entire life. You got 50 grand. It costs you about $25,000 a year in annual living expenses. And I also like to add an extra 10% of that living expenses on top as well, as cushion, so to speak. So that can include unforeseen medical visits, car repairs, home repairs, that sort of thing. Kind of gives you guys a cushion. So in our example here, we've got 50 grand in savings, 25 grand in annual living expenses, and then 10% of that to kind of use as a cushion for any unforeseen circumstances. So when you kind of do the math here and take the difference between the savings and the expenses, you're left with about $22,500 in investable assets. So that's just the way that I do it. But again, you guys can kind of, if you feel like a year's worth of living expenses is not enough for you, maybe you can make it 2 years worth of living expenses. Maybe you can make it 6 months. Totally up to you. Moving on. So with that $22,500, once you identify your investable assets, how do you structure a portfolio? I like to look at 4 different buckets: cash, insurance, speculation, and then investments. So the reason why I have a cash portion in my portfolio, even though your portfolio is technically supposed to get your money to work for you, this cash position makes me feel better in case of a market correction, a stock market correction, housing market correction. I like having 10% of my investing portfolio in a liquid cash position to kind of take advantage of any fire sale in a crash. And then moving on, we have insurance. What do I mean by insurance? I'm talking about physical gold and silver. So this kind of protects me from any sort of inflation. This is sort of my inflation hedge. Gold has maintained its value across hundreds and even thousands of years. So to me, gold and silver, gold is primarily a monetary metal, which means it is a metal that's used mainly for monetary purposes. Silver, 20% of the uses of silver are monetary, whereas the remaining 80% are industrial, going into electronic products and so forth. So you can kind of adjust your allocation of gold and silver accordingly that way. Next up, we have speculation. This is sort of your get-rich-quick section. Stuff that's really, you can really see growing 10x, maybe even 100x. For me, I like to allocate this portion of my portfolio into cryptocurrency. I am mainly in the Bitcoin and Ethereum domain. Haven't really branched out into the altcoins, Litecoin, Cardano, and so forth. But, to each their own. So to kind of recap where we've gotten, I like to have 10% in cash, 10% in insurance, 10% in speculation, and then I like to have the remaining 70% in investments. And how do I define an investment? Well, an investment is something that can give me a high dividend yield, whether it be in a stock or it could be an income producing real estate asset as well. So an investment to me, it's not anything that I feel is a gamble, a speculation, and also not insurance. Gold traces the valuation of the dollar inversely. So what that means, as the dollar goes down, gold goes up. But really, in real terms, gold is maintaining its value while fiat currency is decreasing its value. So gold isn't really an investment. Cryptos, I don't really see that as an investment as much as it is a speculative play. And then cash, obviously, is not an investment. So an investment to me is anything where I can feel with a great amount of certainty, confidence that I could see fairly significant returns in my time horizon. And my time horizon is about 5 to 10 years. That means I hold on to a stock, an investment, for just about that time. I'm not looking to trade. There's a difference between trading and investing. A trade is when you buy a stock and then you sell it, in less than a week. An investment is when you really hold on to something and you let it mature and grow across the years. So, how do we hedge our risk? Well, we do it through diversification. There's 3 different levels of diversification that I like to kind of employ on my portfolio. First is on the stock level. So I like to have more than just a single stock. If you have 22 grand that you want to invest and you put it all into a single stock, well, no matter how sound the company is that you invested in, it's still kind of speculative. It's more of a gamble. You want to have a basket of different stocks, different assets. So that way, it kind of requires multiple assets to go wrong, for things to go wrong in your portfolio. But then on top of that, we want to diversify across multiple sectors. Because if you buy 20 different stocks in the S&P 500, or you buy 20 different stocks in the tech sector, what happens when the S&P 500 undergoes a market crash? Every single stock in that basket goes down with it. That defeats the entire purpose of diversification. And the same thing that happens with tech stocks. If the tech sector goes down, then pretty much every single stock in that sector will go down accordingly. So we want to diversify across multiple sectors. To me, I like to look at the commodity space. I like to have stocks in uranium miners. I like to have stocks in gold and silver miners. I like to have stocks in copper and nickel miners. Battery metals are a big play. That's your copper and nickel miner. Next up, finally, we have geography. Not only do we diversify across multiple stocks in a basket of different sectors, but we also diversify across geography. So I don't just put all my assets into one particular country, whether that be the US, whether that be Canada, Australia, a country in Europe. I like to have my allocation spread across the world. So that way, the entire purpose behind diversification is that it requires more things to go wrong for things to go wrong in your portfolio. So it brings it to a point where the entire world has to go down for me to go down. Well, that's it for now, guys. Thank you guys for listening. Shoot me a comment below with any topics that you want me to cover. Hit the like button. Please subscribe. Let me know what you think. I really appreciate it. Thanks.